Let's spend a few minutes talking about technology. You talked about the industrials earlier, talked about the 3% Treasury yield earlier. Alphabet, Facebook, Amazon, and Apple are all down. Alphabet, the Google parent, top of the screen, down nearly 5% on what, if you just tuned in yesterday in the afternoon, you would have thought, and you may have been right, by the way, were pretty good earnings. But some issues have come up since then. Adam Lashinsky joins us, Fortune's executive editor. I brought up our mutual friend Gary Kaltbaum's note to Charlie Gasparino there a few minutes ago that it's not always the news, it's the reaction to the news. And stock-wise today, it's this is pretty rough reaction-wise, even though those Alphabet numbers, they weren't that bad. I know there are cost concerns and other things, but they're pretty good numbers, right?
Well, they're very good numbers, but people got very excited by the headline earnings number, which we then found out was driven by a markup of their investments, in particular Uber. So I think investors are very emotional, and they can be emotional on the upside and on the downside, and they look at these costs, and Google is spending money like the proverbial drunken sailor, and they start to get emotional. They start to get negatively emotional.
Speaking of emotion, what's the mood or emotion like these days out in Silicon Valley? After what Mark Zuckerberg went through, as these earnings start to come out and their concerns about the future and the privacy regulation and everything else, how are people feeling out there?
I think the mood is somewhere from schizophrenic to morose. So, and when I say schizophrenic, people are afraid. There have been multiple hits to the psyche of Silicon Valley. There's been the Me Too movement, which hit Silicon Valley hard, even before it hit Hollywood. There's a bunch of programmers in Silicon Valley. There's the privacy issues, which is having a meaningful impact on Facebook, maybe not on Google. Maybe Apple's latest iPhone, the 10, isn't doing so great. But on the other hand, these companies continue to just mint money, and more of them are going to be going public, not fewer. So Silicon Valley is a little bit confused right now, which is fun and interesting.
No,
frankly.
I'm not surprised. Yeah, exactly, to cover it. But I'm not surprised, because if I was coming in, this morning, and before, as you say, we dug into the numbers on Alphabet and everything else, I think I probably would have made a case that all this techlash stuff and all these concerns may be overblown. That hey, maybe people don't care as much as we really think about privacy. Maybe we're going to be able to dodge the bullet here, because these companies are making a ton of dough. But now, as we move into an afternoon on this particular day of the week, it turns out now we're highlighting all the negative concerns.
It's a great point, and they have dodged these bullets many times. So if I had to sort of go up and analyze it, I'd say this is a classic short-term versus long-term thing. The short-term is almost nothing but good for these companies. Right. The long-term, that's where you make a judgment. Today, the market's making a short-term judgment that the long-term is bad.
All right, man. Good to see you as always, Adam. Thank you very much. Adam Lashinsky out west in the valley.